A lot of people don't understand the Federal Reserve System, so I figured I'd take some time to explain it to you. Now, the Federal Reserve is in charge of printing all of our money. Now, say I'm the Federal Reserve. So let's say I want to print $1 million. I can't just go and print $1 million. That would just be phony. So what I need to do is acquire some sort of assets that are worth $1 million. So I go to my friend Harvey here, who is approved by the US government to sell treasury bills. And what I do is I write him a check. Now Harvey knows that he can't actually cash that check because he's in on the system. He knows how it all works and that check really isn't backed by anything. So he has to deposit that check in a Federal Reserve bank or a member of the Federal Reserve banking system. And so he goes to his banker, who is Bananas, the banker. And Bananas, the banker, is also in on it, and he says, "Oh, a Federal Reserve check." So Bananas deposits the check with me, the Federal Reserve. So he now has $1 million check from the Federal Reserve on deposit. What that means is that he can now make loans for up to 10 times the amount on deposit. He only has to have 10% in actual holdings to make loans. So now he has $10 million that he can loan out to people. So with $1 million in the Federal Reserve, the economy looks something like that. But Bananas is going to make a loan to Mustafa because Mustafa wants to start up his own company. And Mustafa wants to borrow $10 million. He's got a good credit rating, so Bananas will give him the $10 million. So, while the Federal Reserve only has $1 million in it, because of the fractional reserve policy, Bananas can now make a $10 million loan to Mustafa. Yeah, something like that. Mustafa takes that $10 million loan, which is in the form of a check from Bananas the banker, and gives it to Cash Cow. Cash Cow is a contractor. Now, Cash Cow, he likes to operate on a cash basis. So he takes that check that Mustafa gave him to the bank and asks for actual cash in return. Now, as any banker will tell you, cashing a check of that size takes a few days because they don't just keep that kind of money on reserve. They only have to keep 10% on reserve. So Cash Cow has to wait, but the money is guaranteed and Bananas will get it for him. Now Bananas comes to me, the Federal Reserve, and says, hey, these people, they want to actually cash that check for $10 million. I need the cash. And of course, I've only printed $1 million. It's all I've got is $1 million. But I have to provide the cash if the person wants to cash that check. So what do? Why, I write my good friend Harvey a $10 million check so that I can create the cash to pay off Cash Cow. Which of course Harvey takes to Bananas the banker and he deposits it back in the Fed. So Bananas the banker now has $10 million in the Fed and he can make loans based on that. That means he can loan out up to $100 million now. I wonder what that's going to do. Damn, the economy's getting pretty big! Now this is called fractional reserve banking. And the Federal Reserve and its fractional reserve banking practices are ensured by the full faith and confidence of the US government, which, I believe, is only a few $1 trillion in debt. There you go. That's the Federal Reserve System.